students, welcome to my presentation. Subject Cost and Management Accounting 1. Presentation doing by Vinay Kumar C, Assistant Professor, SVS College, Bantwal. Today's discussion topic is pro forma of cost sheet and also called as specimen of cost sheet. So here this is the pro forma given relates to ABC Company Limited cost sheet for the period ended dash dash dash. So you should have 5 columns. Under the first column you should mention elements of cost. Second and third column should be units. Third column total cost, and last column is cost per unit. Cost per unit which is required to calculate per unit. Okay, first one. So I already in many videos I told that how to make an entry towards the various expenses incurred by a product or services. The first one, under the cost sheet, you should mention opening stock of direct raw material. Similarly, you should add purchases of raw material, transfer from other department, carriage inwards, octroi, import duty, duct charges, etc., and also the primary package materials. So deduct transfer to other department, material lost or damaged, material sold, return outwards, and closing stock of raw material. Okay, and then you get the cost of direct material consumed. For that, add direct wages and direct expenses. So finally you get a prime cost. This is very important because in an examination they are asking the question for 5 marks, or even though they go for 20 marks also. Okay, so how to calculate prime cost? So now you understood. So these are the various expenditure should be incurred. Finally the prime cost should be taken. For prime cost, again you should add the factory overheads. What are those factory overheads? They are indirect materials, oil, waste, grease, coal, fuel, gas, water and steam. Similarly, consumable stores, work stationery, indirect wages, wages of foreman, storekeeper expenses, drawing officer salary, purchase department expenses, service department expenses, R&D expenses, timekeeping expenses, work trainings, that means workers training, expenses like welfare expenses that may incur ESI and PF, workers compensation, works manager bonus and canteen expenses. So these are the various expenditure that incurs the factory overhead. Similarly, factory expenses like eating, lighting, rent, insurance, cleaning, repairs towards factory building and plant and machinery, depreciation toward factory building and plant and machinery, loose tools also, material handling, internal transport, normal loss of material, normal idle time cost, rectification cost of defective work. So all the expenditures towards a factory overhead, and deduct the sale of scrap and add the opening stock of work in progress and deduct the closing stock of work in progress, and finally you arrive at factory cost and also called as work cost. For that you should add office and administration overhead. What are those expenditures? They are salary of office staff, counting of salary, office rent, printing, sundry expenses, establishment charges, depreciation, furniture, building, direct fees, telephone, telegram, postage, audit fees, legal expenses, bank expenses, subscription to periodicals, journals, etc. And finally, we are getting cost of production. For that, add opening stock of finished goods and deduct closing stock of finished goods, and finally you get the production cost of goods sold. Okay, for that again you add the selling and distribution overhead. They are salary to sales staff, commission, traveling expenses of salesmen, advertising, catalog, free gifts, showroom expenses, demonstration expenses, trade fair, sales office expenses, depreciation, etc. Depreciation towards delivery van, working warehouse expenses, that means warehouse expenses, packaging and containers, finished stock insurance, after sales expenses, carriage outward, other interest and financing charges for production of goods, and then interest on bank loan, cash discount allowed on sales. So finally we get the total cost. For that we had the profit, and finally we get the sales. If it is loss, we deduct the loss from total cost, and finally we get the sales. So what are the expenditure which is not taken under the cost sheet? So that also called as excluded from cost sheet. The first one is bad debts and reserve for bad debts recovered. So okay, these are the financial expenditure which should not be taken. Similarly, goodwill written off, debenture interest, profit from canteen, dividend to shareholders, dividend received, loss on sale of office building, delivery van, interest on capital, cash discount on purchase, discount on issue, and also it's called as a redemption of shares or debentures, expenses relating to previous year, damages, interest or dividend received on investment, transfer fee, profit on sale of fixed asset, payment of income tax, payment of sales tax, dividend paid, and then transfer of profit to reserves, donation and charities, excess provision for depreciation on fixed assets, amortization on fixed TCS are also called as intangible assets such as goodwill, preliminary expenses written off, patent, trademark, copyrights written off. So these are the some expenditure which should not be taken, along with capital issue expenses, underwriting commission, and loss on issue of shares, and debenture written off, etc. So I insist the students, you should take down this information. So first you should write the pro forma of the cost sheet, and then you should also mention what are the expenditure which should not be taken under the cost sheet, because it is too important. If any one of the expenditure of excluded expenditure, if you are taken under the cost sheet, the problem will be wrong. So that's why these expenditures near to the financial aspects should not be taken. Anyway, in next class we are going to do some problems towards a cost sheet. Thank you for watching.